Okay, so I hope you can hear me correctly now. It's the first time I'm trying the OBS recording. So, that's actually my second recording because the first one, one the screen capture didn't capture the the section of the screen that I was talking about. So, I was watching from New York when they came from this W, made a move up, made a move higher. Then I saw that they topped out around the end of the session. I saw this stopper candle and I was trying to short in this range, hoping for, no, in this range. After I saw the red vector break the 50, um, I could have exited the trade at the 200 EMA, but kept it open. In the end, I had to close for a small loss. Um, I didn't want to risk too much since it was the end of the New York session. Asia session didn't start yet. It was around 11:30. Um, I wanted to trade. I wanted to place a sell. I expected a move down to retest. Actually, I wanted to retest of the New York Brinks box high, which is actually around this level. And as you can see later in the session, it does provide a significant support twice actually. But anyways, it was Asian session. I fell asleep and I missed the move. But what is interesting from the trading strategy actually, the TVT20, which stands for the trend validated trade, is that you can pretty clearly see that Asia had momentum down. From this high up, which was the stop hunt at the start of the Tokyo session, this is around 1 a.m., they moved downwards pretty significantly. You saw good volume, good move down. It came back up around Hong Kong session, normal. They got in, moved down. Yeah. I woke up at 6:05, which is exactly at this vector right here, the green vector. So I woke up at 6:05, looked at the chart, knowing it's towards the end of the Asian session, and knowing that usually when you see a significant move in the Asian session, what they do towards the end of the session is retrace back to the 50. So here we see that, okay, they moved away. I saw this red factor, but it didn't close very strong. A green factor initiated um, the new positions and market makers entering buys, mm, closing of sells. They could profit from their previous positions here. Um, and that's when I entered to buy. So just to go back and to look at the chart for a bit, here is the same thing where the Asian session had one significant move down. Now I can think that's Jesus, best move down ever. And then towards the 6 years, they did one more move down, didn't break the previous low, which is here. If you see it, which is at this level, didn't break it, and then they moved back towards the 15. Another Asian session. Here, the Asia move down first. Tokyo opens. They go to the right direction, yeah. And then towards the end of the session, here is 6. They made a high and then reverse back to the 50 EMA. Okay, so on that logic, I took a first trade exactly at the end of this candle, start of the next candle, thinking that I should see a retrace towards the 50, towards the 13 EMA. So my trade was exactly this full candle. On the 1 minute, if you see it was first green and then a blue vector. They went a bit up, retraced, and then made the move. Mm, yeah, but anyways, so I wrote that first. Then I saw this pullback towards the 5 EMA, but the 5 EMA held and supported. So I took a trade on the first time the candle touched the 5 EMA and didn't break it. So my trade was opened here. I saw a bit of a drawdown here, which was very short. My stop loss was this red candle. Yeah, so that it stayed inside this bullish candle. So it came close to my stop loss, but the loss was negligible. I had only one lot. My entry was very low, so it was totally fine. Kept it open, and then I rode up towards the 50, which was a pretty clean move. Um, I already calculated that the 50 should be around the 115,404. That was my calculation. So that's this line right here. Let me delete the other line so it's more clear to see. Yeah, so that was this point right here. Um, Let me delete this one as well. Actually, I'll talk about that in a bit. Oh no, I need to keep that in the chart. Okay, anyways, yeah, so I calculated that the 50 EMA, so when I was here, the 50, when I opened my trades, the 50 EMA was here. So I saw that it's moving down, but the movement down is slowing. Yeah? It's starting to slope slowly. So based on that, I calculated that, okay, yeah, around this area is where the 50 EMA should end up. It ended up at 115,470, yeah, when the price and the 50 EMA intersected at the end of the Asian session. So I was extremely close, just 68 euros, or the section dollars, $68 away. So that's 4 times the pip. They have 4 times spread, so that's really nothing. So if they think trading terms, that's 60 cents away. I took profits from the trade a bit earlier. So I took profit at this, at the 115,363, when the trades touched the 50 EMA cloud, and just I closed it at the high before it started to pull back, but when I felt the pullback would happen, I could have kept it because I put the take profit at the 404. I could have kept it to that level, but I felt that I expected that it was just a quick retrace to the 50 EMA and then there would be another move down. Just as we saw before here, towards the end of the session, they didn't completely fully touch the 50 EMA yet. That came only later, but at the same level. So yeah, should you have held that trade, yeah, you would never have reached higher than that profit. Yeah, so for just that little movement. So knowing that this is a riskier trade, and that I'm expecting like a quick retrace, I closed the trade and it was a very decent profit for me. So I was totally fine accepting to take the profit there. So here I started to expect a move down. I waited for another bounce up. I took a short, I think it's wait, I took a short at this candle when they moved down, bounced back up, failed to close at the high, moved down. I took a short at that level, but it was outside of the Asian session before the EU session. So actually not a good time to trade. So I should have either kept the trade open and had a very low risk. But since the 50 EMA was already quite far away, my risk was quite high because I opened here. So yeah, I would have had 1.5 times reward for the one-time risk. But I was not liking it so much, so I closed the trade. It was a small loss, but reasonable, and just went about my day. But what I wanted to tell you as well, with my app that I made, When I opened the trade here with the sell, it automatically calculated that the take profit should be at this level based on the 10% um, the 10% trade that we're looking for. So do you should you close it at that? No, yeah. If it moves further, even better. But it's a good way to be take profit and where to minimally also take profit because you have to think as well like we have to cover the spread in so many trades, so you need to earn in some trades enough to cover the spread for the next coming trades, else you will actually be not profitable. So back to what I actually want to talk about is the actual strategy that he mentions and that we're learning. um, so the main thing from the strategy is quite simple actually. It's where's the trend, which way is the trend pointing, is the trend validated, take the trade for 10%. The movement, the 20 pips that they talk about is 10% of the ATR. So I calculated it for Bitcoin. It's for one lot around €1.70 to €3.40. In that range is where you should take your profits. So um, if you look at the chart, Asia made a pretty significant move downwards. Um, we missed the move, of course, because yeah, we're sleeping in Europe. Wait, just give me one moment. Okay. I was out for a bit. I took a short trade. We'll talk about that in a sec. Let's keep moving this one. Forgot now even which price this was at. I'll just delete it for now. Okay, so what the strategy is that the trend validated trade 20 pips. So from now on, instead of 20 pips, because 20 pips is for Forex, in Bitcoin it's more like 30,000 pips. So I'm gonna say 10%. And the app that I wrote will automatically calculate that for you. It's taking now a bit higher, I think 20%, but it's based on moves that you can expect this, so it's really quite reasonable. Um, but 10% would be with one lot around €1.70, €1.60. Two, and you should do always like you take profit then for one lot. It's between €1.70 and €3.40, something between there. It's really quite reasonable. And what you should aim for, what because it means that you can cover the spread of at least 10 more trades. So if you would open a trade and close it immediately, no profit, no loss, you're still playing like 50-cent spread. So you should be able to cover that for at least 10 trades, because else you won't be profitable. Okay, back to the strategy. So the strategy is quite simple. What is the trend? So the trend starts with the dragon, which is the 50 EMA. Yeah, which way is it pointing? So in Asia, we clearly saw that there was a trend downwards. The 50 EMA was pointing downwards. Even the 600 EMA was pointing downwards. Better. The 200 EMA started pointing downwards around this section. You saw it curving quite clearly here, which would have been a good entry point as well. Um, but yeah, we missed the move, right? Oh yeah, and the bias, which is the 100 EMA, which you see here in between, all are pointing down. So we took the trade to retrace, yeah? We missed the move down, but EMAs are still pointing downwards. So the trend validated trade is not to look here for a buy yet. We're gonna ignore now that it's not within a session. Normally it should be from the London session. If you're trading Asia session, it should be from the Hong Kong session. So that's this area where you always see like here is the true move. This is bit crap. Um, So you look first, where is the trend? So where are they pointing towards? What are they pointing towards? So I'm trading the 5 minutes. So I'm looking at the 50 minutes, where they're pointing to establish the trends. 50 EMA, 100 or 200, yeah. And then I'm looking on the 5 minutes. Since we have on the chart the 5 and 13 EMA, which they don't use, you don't really need to look at the lower time frame. So like I don't really need to look at the 1 minute, because I know from the 5 and 13 EMA what their point, the 50 EMA is pointing at on the 1 minute. Yeah. So on the 1 minute, for example, like you could see that here the 50 EMA starts pointing up, and then here starts pointing down, but that's not, that's more for entries. Yeah? That's 5 and 30 we use for entries and exits. um okay, so the trend here is still pointing downwards, even though it sloped straight and that the price came back to it. They failed to break the dragon. Yeah, the price is still below the dragon. The trend line is still below the 200 EMA. The bias is fine if it's somewhere in between, because it's slower than the 50 but it's faster than the 200, so usually it's somewhere in between. That's fine. So price is still below the 50, the 50 is still below the 200. So a short does make sense. It means that the probability that a short would work out in the direction of the trend, so the trend is short, a short in that direction, there's a probability that, yeah, you can get a decent 10% trade out of it. So what you do wait for is the retrace towards the dragon for it to fail. Here it's a nice failure because it's like a small M pattern. They made a high, went up again, failed to close above that high, so the people in this high are still trapped. The price came down, 5 and 13 cross. Take a short here, and your 10% trade actually would take profit around they're around this area actually, so around where I had my previous line, around this area. And if you can see, yes, shortly after this second leg of the W ended, here's the stopping candle. So yeah, you could have let your trade even run until you saw the stopping candle or the M2 level, but yeah, it's a decent trade. um, that being said, the rules are better to ignore it. It's out of the session. Now, since we're trading all the same lot, it's not really worth it. But if you had a variation lot, yes, you could say like you risk here one lot and you have a bigger account, then normally your trades are 2 or 3 lots. Okay, that's fine. So that's a bit the logic. So it's to look for what way is the trend. So for example, here the trend was up, so my trades were buys. Um, Here the 200 started pointing up, the 50 was pointing up, the 100 was pointing up, and I waited for retrace back to the 50, and then take a trend trade up, and have my stop loss just below the 50, and take profits reasonably fast. Here was a pretty nice one actually, where they when they retraced back to the 200 at the end of the session, but they failed to break the 200. They came back to the 50. If you waited for a breakout of the 50, which is around here, together with the 5 and 13 cross, you take a buy and you have actually like a nice 20 to 30% trade here. So that's the thing. The higher time frames work better. So 5 and 15 minute is recommended, rather than the 1 minute. The 1 minute gives too many fake signals, and higher also doesn't work that well. You can look at the 1 hour to establish a general market structure. Like you see, like here, the market was in an uptrend. They created two significant highs, and since then have been slowly in a more of a downtrend. So only if they break above the 116 would I consider like, okay, yeah, no, we're trending back up, we might look again for a big 120, 122 move, like an all-time high. But right now, we're more in a downtrend. Um, I think that's so far what I've learned. But it's all about, yes, other trades can work out, other setups can work out, other moments of entries can work out, as we've known and as we've traded as well. But it's more about what is most probable to work out for you. So here I see prices going up. I see that it made a W. I'll wait till the 5 and the 100 and the 200 starts curving a bit more, which means the price breaks out of this level. So by then it starts to be this starts the EMA starts to point. So first price need to move for, and then later the EMAs will point in that direction. And then I will wait for the retrace and then look for a buy. Yeah, and Tino knows, always says it as that's the pattern, the pattern, the pattern. Yeah, the pattern is the retrace, and then you look for a continuation in the direction of the trend. But your entry is at the retrace or the breakout of a structure. So, for example, this is the retrace. You can take a trade here, which is insane, but you take a trade when it breaks this structure, when it breaks below this, when it crosses, it breaks below this move up, yeah, and there you have a nice trade. Still moves against, but yeah, your stop loss is probably here, huh? Probably around the 50, around the 50 EMA or even this high. So yeah, it does move against, but it shouldn't stop you out or be a extreme loss. So what he says as well, which is very, I think, good to think about, is to trade one lot per $100. So if you have now 100 euros, you play with one lot. When you have 200 euros, you still open one lot at a time, 001. But the 001, if you have $200, you can open two trades. So what you can do is you trade one lot and then 001. And then when you see like, okay, there's a pullback and it comes close to your entry. So let's say, for example, we were here in a short, it pulled back. Wait, no, let's say we were here in a short, it went in our direction, it pulled back, it went above our entry slightly, but not at our stop loss. If we tried here another sell with a close stop loss here, yes, maybe we would have stopped out with a 50-cent loss on both trades. So in total, like 50 cents. But it's so close by that it's worth trying the other sell and to see if the move continues in your direction. Then yeah, you would have double the profits, 3 euros 40. Okay, so another thing that I wanted to talk about is yeah. So another thing I want to talk about is yeah, that's the trade. So yeah, you open 0 lot at a time. You look to scale in. So you have 200 euros now. You look to have at most 002 open in total, but they need to be two individual trades. Let's say price doesn't pull back, but it moves in your direction. So let's say I have here the breakout of this W structure. I have here trade open 01 lots. It moves out. It breaks the 200 EMA, rises a bit, pulls back, and then continues. Then I would wait again for it to break that recent high and there open 01 lots. So there's another rule that if you see these squares, okay, here they're not really squares. On MT5 they're squares. You can only have one lot open per square, one trade open per square. So you would wait for it to break this structure, this high, bounces back, move away, and then open. Not that you have here a trade, and then they're all in the same square. No, let it move away enough for you to be able to cover if it would move against, and not that, okay, yeah, now all your profit is gone for one trade. So that's a bit what I have so far. See you tomorrow.